Trade Desk stock is down 46% in the past year, mainly because they reported some disappointing earnings. So in this video, I am going to do an in-depth analysis of the company by looking at the financials, the forecast, some important statistics, using my spreadsheet to calculate the intrinsic value of Trade Desk, looking at the main risk of investing in this company, as well as revealing whether or not I am adding it to my portfolio. Starting with their financials, Trade Desk is a fast-growing company as their revenue grew from $700 million and it is currently at $2.6 billion, which is an average of 20+% growth per year, which is very, very good. If we take a look at their profit, their net income has also grown very consistently over the past 3 years and it is currently at $417 million. And they have even more free cash flow, which has grown from $100 million all the way to $755 million currently. They also have very good margins, with gross margin being at around 80%, profit margin being at around 15%, and free cash flow margin is around 30%. So far, things look very good. And if we take a look at the financial forecast, their revenue is expected to grow at around 18% per year for the next 3 years and reach $4 billion in 2027. And EPS is expected to grow to $2.62 per share. So a lot of growth is still expected for Trade Desk. Then, in order to calculate the intrinsic value for Trade Desk, I use my spreadsheet, which is essentially a discounted cash flow and net income model. And as you can see, the intrinsic value according to it is between $36 per share and $90 per share. I did a 7-year analysis with low, middle, and high assumptions. The stock is currently trading at $52 per share, and therefore this means that if my low assumptions occur and you buy the stock today, you're going to make a 3.8% annual return on your money, middle 12%, and according to my high assumptions, a 19.5% annual return on your money. And I believe my assumptions are reasonable as I have the company growing between 14% and 22% for the next 7 years. I assume that their average profit margin and free cash flow margin is between 22 and 30%, and I assigned a P/E and price to free cash flow at the end of the 7 years of 18, 20, and 22. I'm going to leave a link below if you want to access the spreadsheet and do your own assumptions. It is very simple to use because all the calculations are done in the background, so you only need to focus on the assumptions that matter. Moreover, Trade Desk has a fantastic balance sheet as they have $1.6 billion in cash and only $343 million in debt. Regarding the main risk of investing in Trade Desk, number 1 is low in growth momentum. Trade Desk has been growing fast for years, but recent earnings guidance shows the slowdown. Management expects only 14% revenue growth in Q3 versus nearly 20% previously. If this trend continues, the market may no longer view TTD as a high-growth stock. Number 2 is rising competition in ad tech. So Amazon is aggressively expanding its demand-side platform and leveraging Prime Video, Twitch, and e-commerce ad inventory to attract advertisers. So other players like Google or Meta are also competition. And number 3 is the leadership changes and uncertainty. So the sudden departure of the CFO created an uncertainty at a time when investors' confidence is already fragile. In conclusion, I believe Trade Desk is a great company. However, I am personally waiting to add it to my portfolio because I like to invest in companies that I believe are heavily undervalued, and I believe Trade Desk is just fairly valued. As you can see, the best performing stock so far this year is SoFi with returns of 222%, and my last addition was UNH stock, and we are up 22% already. I made a video on UNH a couple days ago in case you want to check it out. I hope you found this video valuable. Let me know what you think about Trade Desk stock in the comments, and I'll see you in the next one.